What's going on, guys? Hope you're having an absolutely fantastic day. So today we're going to talk about why, in my opinion, we are already in a bear market, right? So you can see this bear, very happy to see you. This is like the bear market waving hello to you, and us waving goodbye to our profits, right? So some of you might be asking, what are you talking about? From the peak until currently, we're only down 4 or 5% on the S&P, and even at the lowest point, we are only down about 10%, right? So I just want to talk about like officially, yeah, of course we're not in a bear market because officially what a bear market is the most commonly followed index going down 20%, right? Which is the S&P 500 going down 20%. So yeah, in official terms we are not. But if you take a look at all the other stocks, right? So just Facebook is down like 15% from the peaks, and about 22% if you look before this few days rally, right? But if you look at the aftermarket, you can see that it's down 23%, right? And this is what I'm talking about, right? I'm more talking about bear market sentiment than actual like bear market numbers, right? Because as you can see, the S&P 500 is not in bear market territory. So why am I calling it a bear market? But you realize that these things only happen basically at the peak or after the bubble has popped, right? Because if you report earnings that are among expectations, but your guidance is a bit weak and your stock is down 23%, right? That's some really bad sentiment in the market right now, right? So we can take a look at another one that we know, so that we know this stock is not just an outlier, right? And bear in mind, the Facebook stock is a very big stock, right? It's a $900 billion company, right? So tomorrow they stand to lose about 200 billion worth of market cap, right? So we can take a look at another one, which is PayPal. This is down 25% today, right? And down another 3% after markets, right? So maybe looking a bit interesting already, right? So we can see that all of these are not just one-off things, right? And you can see Netflix, it also happened to Netflix, down 20% in a day, right? So when we see that, I think as investors, we got to take a step back and look at what's happening, right? And especially all these stocks that just sold off, maybe you can take a look at their fundamentals. Are their fundamentals still intact? So I myself can say that I think fundamentals are intact for maybe Facebook. PayPal, I'm not so sure. I haven't done so much research for it, right? But Facebook definitely is scary with all the antitrust and all coming. So yeah, you gotta weigh the risk and reward, right? So next, I want to talk about the consumer sentiment, right? You can see that these few months after this stock market volatility, and especially for all these stocks, right? You maybe not for the S&P 500, Nasdaq, and all that, right? But for all these stocks, right, it's been absolutely selling off, right? And you can see the consumer sentiment kind of rhymes with it, right? In the start of January 2021, you can see the AMC stock skyrocketed. So I'm not attributing that one thing caused everything, right? But you can see at the start of 2021, GameStop stock actually skyrocketed, right? And that coincides with the sentiment really skyrocketing, right? Because you can see all of the GameStop people making money here, and their consumer sentiment is going up, right? But the moment it starts crashing down, which is in November, right? You can see that this market sentiment is actually lower and lower, right? So I'm not saying that there is a one-to-one correlation, right? Because clearly you can see that the lower consumer sentiment started in after July, right? So it's not just one factor that makes things happen, right? There are multiple factors like inflation, em- employment issues and all, but I think there's no real big employment issues because basically from what I heard, everyone is looking for a worker and a job to be filled, right? So I think consumer sentiment is weakening because maybe of the political tension, maybe people losing money in the stock market. So if you do enjoy me sharing all these statistics, be sure to smash up the thumbs up button, hit subscribe, and also hit the bell button, right? So that's what I want to talk about, right? If you are have, let's say, 1,000 GameStop shares and you make so much money, right? You'll feel like you're richer, right? Even though you haven't sold the shares or whatever it is, you'll feel richer. So you go out and spend and do all these things, right? Let's say a person with 1,000 GameStop shares that put a lot of their money into GameStop, made a lot of money, they would basically take the money and spend it on maybe a new car or buy their family dinner every week or something, right? That is actual change in the economy, right? Versus someone that maybe just makes money from the stock and doesn't care, right? We call them the ultra rich, right? So like Jeff Bezos or what? You think Jeff Bezos cares when the stock is down 10% in a day? I don't really think he cares. He basically still buys his ice cream. He still buys his yachts, right? So that's what I want to talk about, right? So another thing I want to talk about is the lumber prices, right? You can see lumber prices have been on an absolute roller coaster, right? Going from 1006 to 400 something, and then back to 1003, I think, and now it's back to 1000, right? So lumber correcting 30%. I want to say that this is a foretelling sign because when lumber prices go down, right, it's because in the US they use mostly lumber to build their homes, right? So if the prices go down, means there's less demand for lumber, means there's less demand for homes, which means the economic growth is not as good, right? And people are not as confident to buy a new home, right? And there's less household formations, right? But at the same time, you can see at this part, right, when it went down, so the home demand was still very, very high, right? So it's not like the demand just evaporated when the lumber prices went down, right? But maybe it's like artificially pressed or what, because something else is happening here, right? So, but this time I'm actually seeing that the demand for housing is slowing because of rising interest rates, right? So I think all of these are contributing factors. So just don't take like one indicator and say make a trade of it or make an investing decision of it, right? You have to look at everything in aggregate, right? So after this video, what is next to look out for, right? And the next thing to look out for is Amazon earnings, right? I think Amazon earnings are going to be like make or break for the stock market, right? If Amazon earnings are really good, but their forward guidance is very bad, right? You can expect the stock market to be down like maybe 5% in a day, right? Okay, maybe not so extreme, like maybe 2 days they'll be down 3% and 2% or something like that, right? Because Amazon is basically like the person that sells everything, right? Let me just put up a picture of Amazon here. So Amazon is the person that sells basically everything, right? And whatever you want, right? Let's say you want toilet paper, whatever it is, Amazon sells it, right? So if Amazon gives you weak guidance, right, it's basically telling you that the whole market itself, right, like the real economy, right, not like the stock market, right? So it's telling you the real economy is fragile, is weakening, right? So that is a sign for the stock market to start moving downwards, right? Because the stock market is a forward pricing mechanism, right? So basically, if I tell you that, oh, in 3 months and in 6 months, the consumer demand is going to weaken, basically what you're going to do is let's sell the stocks now, which is what will happen if Amazon gives bad guidance, right? You can see that some people will say that, oh, Apple saved the stock market 2 days ago, but Apple didn't give any forward guidance, right? And Apple is like a huge company where the suppliers have basically no bargaining power, right? And they didn't even give a forward guidance. Imagine if they gave like some forward guidance like Facebook, right? Basically their stock will might also be down 10%, right? So yeah, that's about all I wanted to share today. I hope you enjoyed this video. Smash up the like button, hit subscribe, and hit the bell button if you did, right? With that being said, have a fantastic day ahead and peace out.